Hey, what's up everybody? This is Evan Carthy from evancarthy.com, and today we are going to go over an oil setup for the new post oil trading strategy for August 2019. I know there's still a day left here in July, but I went ahead and started this for the trade setups we're going to look for in oil. Plan on also doing one for the Dow Futures, S&P 500, and also the Nasdaq. So when you see those posts come up, keep them bookmarked because they're going to have updated trades as the month goes on. And so what the trade is, here it is right here. And pretty much all these trades are going to be the 15-minute chart because all of them I try to do are intraday trades, but sometimes it can take a day, 2, 3, 4, 5 days. It just depends how long the setup takes to complete. But the goal is to make them intraday trades. Sometimes they are not. So overall, that is the overall setup, and we'll go at it in reverse here for just at the end of it. I'll show you how I got the setup. Basically what it is, we're using that where that yellow circle is, that's the upper pivot point. Down here below, you see the lower pivot point right there. And so this is the 76.4% short setup trade. So what we're looking for is price to hit the 76.4 Fibonacci extension level. Once it does that, that initiates the short setup, and then the exit is going to be down here at the blue box, bottom of the blue box, which is also the 50% Fibonacci retracement level at about 57.54. Now, the way I get out of my trades is I always get out a little bit early because sometimes price can come down, barely take the hard exit at the 50% level, not enough to get you out of your trade, but enough for the setup to be complete. So I'll probably, if I was getting in this trade, which I'm not, just because I'm not trading oil right now, I would probably get out around 57.70ish, something like that, 57.65, 57.70, just to ensure you get enough to get out of it. So the entry again be 59.02. First entry, then the exit would be around, I would have around about 57.65 right there. But if price continues to go up, doesn't hit that 50% level, but continues to go up, hits the blue line and also the top of the white box at 60.35, then the exits move to just north. How they move, the hard exits move to the purple line, but I'd move it slightly up to about 59.10ish rather than 59.02, just to ensure I get out when price comes back and retraces to it. And so yeah, if you had the exit down here, because you entered right here at the purple line, you'd move it up here just barely north of the purple line, and that would be your last time you'd move your exit. So even if price continued to go up more and more and more, you wouldn't have to move your exit. You can get in at any other levels higher you want to get in, doesn't matter, but your exit does not move, and so that would be the final time for it. Now, how I initially got this trade set up is I just don't create these setups blindly, meaning I don't choose some random pivot point high, drag my Fibonacci retracement tool down to the bottom and say, okay, here's the short setup. Just take it blindly at the 76.4. What I look for and what I found, again, this is another trade I found through meditating. What happens when you meditate is things just start popping into your mind just all of a sudden. And so through the meditation, one day, the 76.4% level really started sticking out in my head, and I just started like thinking about it for like no reason because I never had really thought about it too much before. And so when that happened was I started messing around with it, playing with it, and one thing I noticed over and over again, that a lot of times when prices hit the 76.4 level, you'd get a lot of movement off of it. It was very interesting to see, but it didn't happen always, and that's why you can't just do it blindly and just line up a pivot point high, pivot point low, and expect to have retracement, and it's the 76.4 level. So I needed kind of a kicker to it, what initiated it, and so what I look for to set that anchor point high is, on all different time frames, there's different levels and everything being moved around right here. So using this candle right here, there's the pivot point high, that right there. There's the pivot point low for this move right here. Oops, let's go back and fix that here. There's the pivot point low. Price comes up and barely grazes that 76.4 level. So once it does that, that initiates the 76.4 anchor point, or in other words, the pivot point high for it. So price in this move has to come up and hit the 76.4 level, which it did. So once that happens, that sets my pivot point high. And what that means is I can then take that pivot point, drag it down here to the low around 54.72, and that is how I get the setup for it. So that's basically how it goes over. I have to get the 76.4 retracement, sets the pivot point high. then I drag it down. When it comes back up to it, hits it, that's going to set off the trade to the short side. So opposite way it works for going long. You look for I'll show you how it works for a long right here. You get okay, there's 54.72, 56.36 down a little bit. There we go. All right, see it hit the 76.4% level, so we'll just mark the pivot point low right here, the anchor point for it. So then what we would do, oh, and excuse me, I'm sorry, I missed one very important part of this right here. Price not only has to hit the 76.4 level, but also has to come up and hit the 123.6 Fibonacci extension level. So sorry about that. That's extremely important. It's not valid. This isn't a valid anchor point. Yes, it can hit the 76.4%, but if it just kind of goes up a little bit and retraces the other way, that's not a valid thing. So it has to hit the 76.4 and then also hit the 123.6 Fibonacci extension level. So as you can see, price definitely did that. So that makes it a true valid point, and as a short trade, it obviously did because price just went all the way down way further. So price hit the 123 right there. So then all we do now is we start dragging the Fibonacci extension tool up and waiting to see if the 76.4% level is going to be hit. So 57.64, 57.64, bam, look at that, perfect. That 76.4 level is about at 55 points. I need to drag this over so I can actually see it. 41 comes down to 55.33, bounces right off of it, comes and hits the top of the 50% Fibonacci extension level, and that trade would have been complete. So that's how it works right there. That's the way I like the trade. There's also another trade setup I have, so that goes from the same thing. I call it the 423 extension level. Basically what happens is you set the 76.4 level, and then as long as this pivot low doesn't get broken, which I don't think it does in this one, yeah. So then what you go up here and wait for, which it hasn't been hit yet, you have the 423% extension level. That'd be your first entry. Exit is the 261.8, which is actually the 361.8 level, because when you do the negatives, it takes away a percentage point for it, 100% level. That's your first entry exit, but if price continues to go up, that's your second entry right here at the 503% Fibonacci extension level, and then the exit down here is at the 423. And then again, you don't move it even if price continues to go up. So those are the two main trades I'm taking right now. Again, came through meditation, just want to clear it up here a little bit, and good luck out there. Thanks, bye.